Hi, everyone, and welcome to the TimingResearch.com crowd forecast news for June 13th, 2022. We are recording this at 1 p.m. Eastern Time, and this is episode number 346. And my name is David Kosmeter. I'm the creator of Timing Research. And today I've arranged for Sunny Harris to join us again, and you should be seeing her screen right now. And the option professor is back to moderate, so I'm going to turn it over to him.
Okay, great. Thank you, David. And quite a Monday morning to walk into here. But after Thursday and Friday of last week, certainly this was the direction we were pointing. We got the VIX up towards 35 today. So there is a little bit of capitulation going on, but we'll hear from Sunny Harris on what she thinks. Again, some of the stuff that we've been talking about is the PE ratio, which obviously is continuing to contract. So if they cut earnings and the PE ratio contracts, that's where these numbers come from. Anyway, let's talk about what we're going to talk about today with the Sunny bands and everything else. Sunny Harris, please introduce yourself to the uninformed and see if we can help people today.
Thank you. Thank you for being here this morning. It's exciting.
Yeah.
I'm a mathematician, I'm a trader, professional trader, and a programmer, and I've been trading for 41 years. I'm a mentor and consultant and easy language programmer. I'm also the author of 7 best-selling books and the free weekly newsletter, Sunny Side of the Street, and the free Tuesday morning live trading room, and I love to teach people to trade.
Perfect. We have got the Monday morning questions that we have to ask. And so let's start out with the number one, which is on the S&P 500. We opened today on SPX. We can correlate it to anything else you'd like, but SPX was 38.38. And that's where we opened. Clearly, we're under that now. But between now and Friday, what do you anticipate the S&P to be? Over 38.38, under, or basically flat? How do you feel about between now and Friday?
I don't have any competition to talk to this morning, huh?
Yeah, no, it's all on you.
Well, my gosh, I think it's either going to be up or down.
There you go.
Yeah.
And what's your confidence level of that?
About 100%, I'd say. No, it's my Sunny bands say the thing's going on down.
Yeah.
But there are other things that say maybe it's not. But right. I tend to be confident at the Sunny band, so I'm going to say it's going to go on down.
Yeah, we've got some fundamental stuff coming out. Producer prices, I believe, come out tomorrow, and then on Wednesday you got retail sales, and you also got the Fed announcement. So
yeah.
Listen, amazing how these people changed their tune. I mean, wasn't it just a week or two ago that the Fed was going to pause after 2 hikes? And that the majority of inflation has been announced. That was like 2 weeks ago. Right. And now they're saying 100-point jumps and no end in sight. So, you know, it's a wacky world out there if you listen to these guys with their comments. Anyway, so what's your confidence level that we might be lower based on what we know today, obviously?
Oh, what we know today, it looks to me like it's going to be down even further. I think, well, I can't even tell where it's going to. The E-mini looks like it could go down to 36.75.
Mm-hmm.
I'm fairly confident in that, but not 100% by any means. Because you never know with this market, with the button pushers out there playing their video games, buy and sell. It's
exactly.
Kind of wild.
Well, that guy, Druckenmuller guy, Stan, he's very obviously very well-known investor guy. He says, listen, shorting this market looks great, but these things can turn on a dime and just kill you with a big sharp rally. We've seen it a number of times on this decline. You know what I mean?
Yes. Oh, yes.
So you have to be.
That's why I trade 5-minute charts.
Exactly, because if you're not keeping this thing on a short leash, by the time you come back from lunch, the world could change dramatically. Basically, I kind of look at some of the, just obvious stuff. Right now the P ratio, the earnings on S&P is supposed to be about $2.35. And if you multiply it by, I think 16, you get
3,200.
You get 37.60, which is where we are now. So the thing's trading at about a 16 PE now. And the risk is that it goes down to something like 14 PE. And that would bring it down to the 32.90 stuff.
Yeah.
And then the other risk is obviously they cut the earnings. So you're not at 235 anymore. And then next year they're cutting them. And if that happens, obviously you got to do the math all over. So the risk to the market, while people really, because, how many people really talk about PE ratios?
Well, I don't.
That's what
So
I'm trying to, well, I'm trying to say
Yeah.
most people don't, but that's kind of
Right.
like the atom bomb in the backyard. You understand?
Right.
But they don't come up with these prices out of the blue. You know what I mean? There's a real reason why the prices were way up, and that's because the interest rates were at 0. So your PE could go to infinity.
Mm.
But
Mhm.
when interest rates are now at 3.5, then you got to factor that into the PE ratio. And that's why they're compressing from 22 PE down to where we are now at 16. And the question is, are they going to overshoot down to 14? And are they going to start cutting earnings estimates? Because, at the end of the day, there is some kind of a numerical way of figuring the price. You know what I mean?
Yeah, there's a correlation, definitely.
Yeah, no doubt about it. I mean, and it might not work for a while, but ultimately, as we're seeing, earnings and price earnings ratio, obviously come into play at the end of the day.
Mhm.
With regards to any specific stocks that, what looks good when everything's tanking? Is there anything that that looks like it might have value down here? Might be near the low.
Well, there's quite a few of them actually. If you, I don't have that prepared for you today, but I usually run a scanner every night,
Uh-huh.
and I look for all the stocks that are above their 21, 50, and 200-day moving averages.
Well, that universe must be
Believe it or
getting.
not, it's getting smaller, but there are still quite a few.
I got you. Is there
And
any way
those are the
to
ones.
run that scanner while we're here, or does it take time?
It does take time, but I can
Okay.
run it. And you want to have David show his screen? I'll run the scanner.
Sure.
Okay.
Yeah, I mean, I think that'd be helpful because people now would
Sure.
have a better idea of when they go to you, what kind of information you could bring to the table,
Sure.
And
Here it goes. All stocks over 20, and then we run scan, and then there it goes.
yeah, because while that's going, I just wanted to
That's not
mention,
taking
some of the markets like these industrial metals have really thrown in the towel. And maybe the 2-year yield getting above the 10-year, which is called an inversion, which generally predicts a recession. Maybe that indicator plus the industrial metals throwing in the towel might be telling us that the inflation, the recession risk is rising pretty substantially.
Well, here we
And-
have 10 symbols that are all above their averages.
Yeah, and even China's, throwing it in a little bit too, because they're going back into lockdowns. I mean, I guess if you don't have a very good vaccine and then nobody takes it, that's a rough combination.
Right.
Sonny, did you want to show that?
Yeah. I'm
Okay.
ready.
Yeah,
Okay, yeah, you can
just share.
share your screen again. I
Yeah.
thought you were
Okay.
wanting to.
Yeah. There we go. So I've got symbol linking on this green button that says S on the scan, and the green button that says S on the chart. So whatever I click on the scan, it'll bring up that chart. And there's a scan of APA, and I don't know what that stands for.
That's an oil company.
Okay. And it is currently above, barely, but it's above the 3 moving averages.
Yeah.
What's BF.B?
Hold on one second here. BF.B.
Mm-hmm. Browning Ferris dot, I don't know what it is. All it says is BF.B. Here, let's find out this way. BF.B is Brown Foreman.
Yeah, I think they're into spirits and wine. So obviously with this kind of market, probably quite a bit of drinking going on.
Yeah, that's here in Louisville. They make bourbon.
Yeah.
That's right. That's good.
So far we got the energy company, but that energy company is hanging on by the skin of its teeth because the energy stocks certainly are getting whacked here like everything else.
And these are getting whacked too. You see, they're still above, but
they're still above.
This red dot shows exactly where the current price is. So you can see that they're just barely above dotted moving averages.
Right.
CTRA. What is that one?
CTRE. Oh, CTRA. Yeah, that's going to be energy as well, I believe.
Yeah, Coterra Energy.
Yeah.
Likewise.
Oh, we know, like what we're seeing is some of the energy things are hanging on, And we
that
see,
looks like that's about it.
yeah.
Here, Halliburton, that's energy, right?
Yeah. That's another one that's probably going to be hanging on here.
Yeah, and it
Yeah.
looks like they're going to be coming down too. You see on the bottom, I've got these red vertical lines. They were gold and there was a gray one and then they're gold again and then they turned red.
Right.
Right there is where my strategy goes short. Right there, the first dip below that top, see how it topped above the sunny bands? And then
Yeah.
it went just down below, that's where it goes short. So you see it was short for this bar and this bar as well. And looks like it could go on down.
Right.
Although I looked at crude light a few minutes ago and it was 121, I think. LW, is that for Larry Williams? No, Lamb, somebody. LW. Lamb Weston Holdings. What's that one? Don't know. But there are a few that are still out above those averages.
Yeah, I was looking at, do you have any short-term charts that kind of turned up today? Because I was noticing a little bit of a turn up, but then now it's rolling back over on the on the E-mini. It kind of gave you a little buy signal around 37.60 today, but now it's kind of broken down at around 37.93.
Yeah, this is a 5-minute chart and you can see how it went. Where does it start? 6:30. I usually have these colors. So it starts right there.
Yeah.
Was down considerably.
Right.
And then came back up, touched the top sunny bands,
Right.
back down again.
Yeah. Yeah. And with that, if you were day trading or short-term trading with your situation here, would that say blue purple pop that it had off of 37.50 give you a little bit of a buy signal?
From down here?
Yeah, from there. Would that give you a
Oh
little
yeah,
bit
that's
of
a buy signal.
That's a buy signal. Yeah. Yeah.
Yeah.
And now
So
it's
buy
kind of
here, hold up to there and go
Yeah.
short again.
there you go. Yeah. So this is
mean,
where the
it's
this is
just-
where the sunny bands for a shorter term trader could come in quite handy because
Oh, absolutely.
yeah, especially when
And-
there's madness out there. You see, like right now, I mean, when it was at 37.50, the emotions on the downside are so high, but using something that's math based and technical based, you can act more rational because you're not really thinking, you're just using whatever's in front of you.
Right. What I just did is I turned the overnight bars green and magenta so I can see the day session bars more clearly.
Right.
You see right there's where you go short, bang, right there's where you go long. It's just as clear as can be on this chart. And here it's the system's short from this point down to here so far. And these bars are red on the dynamic moving average histogram. No reason to go long yet.
Back and forth there. Yeah.
Yeah, see the dots turning blue, and then it's gray, and now it's red. That's telling me which direction the ticks are going. So I keep all my blue is up. See there.
Yeah.
I keep all my information in colors that I can quickly perceive. I'm very color oriented.
Well, what about like certain sectors, like if we look at XLE, is energy? I mean, everyone's plowing in there as if it's money market, and
Yeah,
that's generally not a good sign. So what does it look
XLE
like?
is-
Yeah.
looks just like the S&P. Down, back up, back down to the midline.
And what about for a longer term? Does it look like it might be rolling
You want
over
some
here?
daily?
If you went to the daily.
Daily looks like it's got a little longer to go down. See,
Yeah.
the bottom sunny band is down just below the 20% retracement. It's right down here.
Yeah.
So it looks like it's got a little further to go down on that.
Yeah, because it's $150 to fill up your car. I mean, at some point in time, it's got to be demand destruction at some point, right?
Yeah, it does. But,
What
you know,
about
the thing is, we have to
Mhm.
remember that part of what we're paying for at the pump is to help the people in Ukraine. You know, they're having a really hard time over there, and our price at the pump is to help them. So
got you.
I wrote a letter to the president in the beginning of March saying, I don't mind $10 a gallon gas if it helps the Ukrainians.
Yeah. Yeah, that's a good thing. What about in the fertilizer stuff? Those grains where the catch meow, it looks to me like they've rolled over too. What about CF Industries, CF, and because these are the ones where there's profits and these people are earning money. Now, if the ones that have profits and the ones that are earning money are having trouble, that does not portend well for the others. Yeah.
That's right. And this one doesn't look like it's doing well either. That's a daily chart right there. Let's look again at the 5 minute.
Mhm.
And it's got basically, it's not traded as heavily as the E-mini, but we've got a down move that happened earlier in the day. See, these
Yeah.
are green and magenta bars. So, and then it followed a week up move, hit the flat DMA, bounced back down again to the inner band, and then up, who's hit the top sunny band, and now it's going down again. And it's down 0.64, 0.7%. That's a pretty good move.
Yeah.
But it doesn't look happy to me either.
Now, the other thing was the gold was trying to get going. It was up $22 the ounce on Friday, but it seems like, and Newmont Mining had a pop. What about GDX or gold itself?
Here's gold.
So it's
So
still
you're
holding
right.
on.
It's still holding on. Let's
Yeah.
look at I look at the daily on this one. And yeah, it dropped significantly here. I mean,
Oh,
it
it
went up
definitely did.
above the DMA Friday,
Yeah.
above a little more, and then down today. So we've got a nice big red bar on that one.
And
It's
if it
down-
and that green that's pointing down, that doesn't portend
This-
well, does it? The bottom
this-
green? No, the sunny band on the bottom has rolled over to the downside.
yeah, that's not a good sign.
That's not a good sign.
No.
And if we break under 1800, it could be sayonara.
We could go down to 1775.
Yeah.
You see,
Like
up
I say,
here,
the dollar is at the strongest level like in such a long time. So
yeah,
and it's putting a lot of recessionary pressures on things, and that's a rough racket for just about anything, doesn't it?
it is, yeah. And you can see where the sunny bands up here, they started turning down, like you just mentioned.
Yeah.
Look what happened after they turned down.
Yeah, that's not a good. I would say it's losing its momentum, and now it's actually gaining momentum on the other side.
You're getting good at reading these.
Yeah, well, I think it's good information, and I like to understand it too, and I'm sure there's people who'd like to understand it too. With regards to so there's the gold, there's your oil, there's your agriculture. Let's put the tech up there, like semis, SMH. I mean, is there any reason to step in front of that freight train?
SMH.
I've been trying to explain to people, if you don't want to lose money, you go to a ladder in the treasury bill market, and you go 0 to 24 months. And then every month you renew at the 24, which is the 2-year. And it's guaranteed you get your money back, and the yields are nice. And every time you renew, you're getting a higher yield. It's not the worst place to be, rather than trying to figure out, I wonder where it's going to stop,
And where are the yields right now?
Well, the yields on the shortest paper is like a 0.1, 0.5, and the 2-year, which is the end of your ladder, is at 3.3. So, I mean, and this is all guaranteed money coming back to you. It's not a bad place to be if you want to not be in the Katrina. You know what I mean?
Yeah, that's a good.
It's a nice island. I always hear this word oasis. These stocks are an oasis. Hey, listen, the oasis that I've been talking about since January is called Treasury bills. And that's a real oasis, not a mirage.
Yeah, I like that idea. That's very good.
Well, I mean, sometimes you sit out. I mean, this Druckenmiller guy says, I'm not trading. I'm going to be taking time off, and I'm going to let this thing settle down, because Lord knows where it ends. The P ratio, was at 16, and at 235, we're at fair value right now, if that's it. But these earnings are not guaranteed for next year. And if these analysts take a machete to earnings, that's not going to be helpful.
Right.
But this is not going to be this is not a lineal thing either. You know that. I mean, this thing could have a 200-point rally tomorrow.
Well, I had students asking me when we had that rally, what, a week ago or 2 weeks ago?
Yeah.
I've been out for a couple of weeks, so I've missed out on some data, but they were like, "Oh, this is great. See it. The bull market's back. It's rallying." And I said, "No, it's not. This is a bear market rally. It's going to go down again."
Yeah.
Like,
and there were some pretty obvious points. This 4180 on S&P was an area that it just couldn't get above. And had it done that, then of course it would have made more sense to get more bullish. But at least the VIX hit 35, so it's a little bit in the higher area. But this is going to be a volatile thing, and the key is obviously
when your shorts don't work anymore, that it's time to look for a rally.
Yeah. Other sectors like materials, XLB.
And what's that one?
Materials, that
Select
would be like,
materials.
Freeport McMoran, things like that. Yeah, there it is, right? That's,
See, it's down to, this is 15% down from its
yeah.
all-time high, which is up here.
And that gives you a little idea when that bottom green rolls over to the downside, you better respect it.
Yes,
Because
absolutely.
that's when you start accelerating to the downside.
Now this, because we've got, you see, we've got a bottom down here and
Yeah.
this 15% down acts as an attractor over to here.
Okay.
So that could hold it. I don't really think it's going to, but it could. It's a possibility. I mean, yeah, I always keep all the contingencies in mind when I'm trading, it's,
Yeah.
this may work, but here's the other possibilities.
And again,
like-
this thing gave you signals that it was rolling over at 87. So you really have no business being in there at 78.
Right.
And then, people
But
come
this
to you
is-
and go, what should I do now? I mean, for God's sake, don't come to me after Katrina and say, do you have any, flood insurance available?
Exactly. Exactly.
What
But
about,
this is like playing chess,
Yeah.
You got to look 5 moves ahead. You got to know what all the other possibilities are at the same time you're making your move.
Oh, exactly. And listen, I think it's all about the flow. I mean, is the river going in your direction? And if it's not, you better respect that, because you're not more powerful than the river.
That's right.
What about financials? Because these banks seem to be folding like lawn chairs as well. Is that because they're not going to loan to the consumer because of the situation, or all this debt that's out there might be subject? Because the real estate, come on, I mean, it's very, very extended, and they just changed the mortgage rates by 50% or more. The applications from, my son works at a bank, and applications for mortgages. I mean, the guy who used to do mortgages he used to be very picky on who came in. Now he's like, send me anybody who's breathing,
Right. Because the interest rates are higher. The interest rates are high enough that they can actually make some money now.
Well, they can if they can loan to somebody, but then the assets they're trying to loan on are depreciating, and that's a rough. What I'm saying is it seems to me that the banks are going into the fade mode a bit here. What do you think?
I would say so.
Yeah.
The average house in Southern California is $1 million now. So
and if it dropped 15%, and it would be 850, that's
still too
certainly
high.
That's still what I'm saying. That's still a high number. And what about if these guys only put 10% down? You're back to that same silly game where the value of of the house is under the deposit.
Exactly.
And that's where you get people.
And then we've got another 2008.
Yeah, that's what I'm trying to say. And again, this Fed, I mean, they are, to be honest with you, I mean, they're all from like Harvard and Yale, et cetera. I mean, they don't know if you keep rates this low and asset prices are jumping up like that, it doesn't end like this every time.
Yeah.
I mean, it's hard to believe,
It's very hard to believe.
But I think one thing they are trying to do is they're trying to let the market do all the work for them. And maybe, let's put TLT up there. That's your long-term.
Letting the market do the work, I think, is the better way.
Well, again, I mean, they're just hoping that if they get deflating this thing, they may only have to go to 2.5% because the thing's already in the tank. You know what I mean?
Right. TLT is down big time today again.
Yeah, because the mortgage market is already. Yeah, the mortgage market is sweating bullets at 5.5. What would it sweat if we were 7.5?
Yeah, exactly.
So they can't, like I say, they want this market, I think, to go up because they're petrified, I believe, that if they had to go to 7.5, boy, what kind of a situation they'd have going then,
Yeah. But as you and I've said before, we saw 17% interest rates, and 7.5 doesn't even look
that
bad.
was not when the houses are this high.
No.
But I mean, they are lucky in that the jobs market is so strong but of course that can flip pretty quick too, probably, I'm sure. But TLT, what is TLT saying? It's just it's hanging in there. Yeah,
it's just going down. It's been going down since, what is this? No, cancel that. 1206 of 21.
Yeah, this is a little bit scary because of the fact that you can see, like, this is the 20-year interest rate, and it clearly is gapped into an area where it's into the abyss area. Right. And a lot of people say, hey, consumer sentiment's at its all-time low, and investors are at their all-time low on bullishness. Well, where do you think crashes come from? they come from low areas.
Right.
In other words, you don't you don't have a crash off the all-time high. You have a crash after it's been going down and down and down and down, and then there's something that gets everybody panicked, right?
Right.
So
Right.
this
Well,
is a
the
this is
crash,
a little mhm.
the crash of 1987 was the same way. I
Yeah.
got out in August of 87
Yeah, because
and,
yeah,
and we didn't crash till October.
right,
And it's been going down since August.
right. And well, this thing has been going down since January.
Right.
So, I think it's a little bit concerning, obviously, like I say, and then a lot of people say they're bearish, but when you look at their positions, they're still owning stock.
Mm-hmm.
So it's not like everybody's already sold out. I think this has more been a buyer's strike than a seller's as much. You know what I mean?
I think you're right. The sellers aren't here yet.
Yeah. I think this is nobody's buying and there's no bid, and the high frequency traders are just pushing the weak side of the market, which is the bid
Mhm.
side, and
Right.
they're pushing. But it'll be interesting to see.
Well,
like I
the
said,
E-mini moved into recession territory this morning.
yeah, which
So
is
it's
that
down. See that this is the 20% line,
yeah,
this last red one.
yeah,
And so it's down under the 20% line now,
yeah.
down 128 points, 126.
Well, it reminds me of when Katrina's coming down at 1 o'clock, somebody says, well, it hasn't really turned into an official disaster, and it's still raining out. You feel like going, hey, wait till 4 o'clock, buddy. Another 3
Right.
hours of this rain, and you'll have plenty of talk about as far as disaster. Same thing here. Just because we hit 19.4 the other day didn't take the official bear market thing off the table to me at all.
Mhm. But the Dow hasn't hit it yet. So you'll
Oh,
see
really?
here the Dow, see the 20% line is down here under where the chart is currently.
Oh, I got you.
If I squeeze it up a little bit like that, you can see the 20% is down here on the Dow.
Yeah.
So I wouldn't be surprised at all if it goes down to that level.
Yeah.
And the NQ is down even lower than that. So if you look at the NASDAQ for a second, see it's under the 30% line.
Yeah. And like I said, it doesn't look like there's anything underneath it to stop it if it really got a push down here. You know what I mean?
You're right. Let's look at a weekly for a second, see if that shows us anything. So we've got, this is the crash, the COVID crash.
Right.
And then this would be where it should stop, but it already went below that. So we're heading for this line right here.
Well, like I say, today it hit 16 PE ratio on the S&P, which is, a pretty good low one. And so there's a outside chance that this 3750 area on the S&P could hold up. So,
Sure.
I mean, that's possible. That's a line that's a line in the sand. You might, but is there anything technically that would tell you that neighborhood could hold?
Not really.
Not really.
No, not that I see.
The bottom of that,
right here, there's a little bit of a congestion that could hold it at, what is this? I can't, it's at 4,000 right there, 38 something.
Yeah, that was a big point to break. Yep.
Yeah. But no, I don't see anything. I don't see support until right here at 34, 32.
Well, I'll tell you one thing that comes to mind as an option guy is if you have stocks you really like and you have money that you could afford to pay for them, this might not be the worst time to start pricing out puts, because when you sell a put, you're agreeing to buy the stock and then you're going to get paid the put premium. And you would imagine at 35 on the VIX, the put premium would be very, very large. So, if you thought a company like Microsoft or Apple or something of high quality, you might want to own or collect a premium. This is the kind of days where you price out that tactic, if in fact that's how you feel.
Look how high the VIX went though. This is probably this is the COVID time right here.
Yeah, that's the April.
It got right there. It went up to, what is that, 82? My gosh.
Yeah, Tiana, just like the Fed wanted to have some inflation in the system, and then a lot of people said, beware of what you want. A lot of people are saying they want to see the VIX above 40 so they can feel that there's capitulation. If you look at the VIX, if it gets above 40, it can go into the abyss on the upside.
It can.
You know what I mean?
So as it goes up like that, we're looking at the market going down just to reflect a mirror image of that.
Yeah, I mean, if you get above 40 and this S&P is taking out 3,700, that would be that would be a very uncomfortable situation.
Yeah, I would not say this is a good time to just play with it, buying stocks. There are a lot of people trying to buy bottoms right now,
Mhm.
bottom fishing. It's just not the time. This is a very dangerous time.
Yeah. Well, then that's why the selling of the put, if you have, it's called cash secured put writing, because you have the money to buy the stock if it's put to you. That is something that allows you to put a kind of a buy order in on something and collect a premium.
Right.
And if it does rally from here, at least you come away with some cash. And if it does go down, the strike price minus the premium would be your cost basis.
Mhm.
And that's a strategy that wouldn't come to mind on a day like today to most people, because that's not the way their mind runs when it goes like this.
Right.
Just like if the market has gone through the roof, that's the day that you might want to consider some covered calls. You know what I mean?
Exactly.
Because that's where you're
But
going to
that's
get
the
paid.
day when, everybody likes to buy high, sell low.
Now your crude oil looks like it's trying to, I see a little green popping up. Can you put that chart up there and see if there's something going on there?
Well, this is weekly. Let's look at a daily chart.
They tried to bring it down to 118 and then,
Yeah, it's at 120.60 at the moment,
uh-huh.
with a red dot out here telling me it's moving down on the day. So I would not be at all. See this Fibonacci fan, the light blue lines that are going up at an angle?
Yeah.
It wouldn't surprise me to see that thing come up here, which is over 130. Now it's going to take some time. It's not going to go up there in one day,
No,
but
but it has a spike potential.
it does have a spike potential. And I'm still watching and reading everything I can get my hands on to see what China's doing in the South China Sea. I think they're going to be trying to take Taiwan.
I mean, you've got war in Ukraine. You could possibly have a war over there. You got the central banks all tightening. You've got inflation going absolutely nuts. I mean, this is certainly a volatile time, huh?
And the Rocket Man over in North Korea is apparently sick.
Oh, is he?
He's in the hospital unresponsive from what I read.
Oh,
So who knows what's going to happen with that?
yeah. Yeah, it's a crazy thing going on. There's no doubt about it.
There's a lot of stuff going on in the world that can affect this market.
Yeah.
There's a blue dot on your oil right there. You see that's going up slightly again.
Yeah, that's like I say, there seems to be a bid coming back into oil. It's the only thing green on the screen.
Mm-hmm. Let's look at the 5-minute on that and see what it's doing. Uh-huh. So it's down here touching the bottom sunny bands. It's either going to break below or bounce off of it.
Yeah.
So we've got an imminent decision right here, right in this area. It's going to do something.
And the green is pointing up a little bit, so it may go that way.
That's the outer sunny band. And it's pointing down on top and up on the bottom. Congestion. So it's with the congestion like that, it's likely to go back up to this area, which is the midline. Midline's at 121.17 right now. And we're at 120.71. So we've got a half a point there. Well, that's what I see.
Yeah. The what do you call it? The Chinese markets were doing quite well. And now they seem to be just pulling back. Can you put up FXI and KWEB and see if there's anything?
KWEB?
Yeah, KWEB and FXI. Are these just pulling back, or is it?
Well, there's FXI. Let's go back to the daily, so I can tell more on the daily from a prediction viewpoint. Well, it hit the DMA midline right there. It's hitting the midline. And
so
the
that really hasn't given up like the other stocks, has it?
No, it hasn't.
Yeah.
It's still hanging on, and it's not below the midline. The ones that I said were above those moving averages were all just barely ticking below the DMA here, dynamic moving average. This one's above it. So it's not done yet. 1, 2, 3. 1, 2, 3, 4, 5. Yeah, that's a 3 wave. So we've got to finish the 4 and go back up to about here on a 5 wave. So it may have a little more to the downside, but it's got more on the upside too. And as China makes stronger threats, that's probably going to take that up temporarily, at least. Let's look at KWEB and see what is that one.
That's all the internet stocks over there.
Ah,
I'm just trying to come up with something that doesn't look absolutely like a Nightmare on Elm Street, and it's not easy. It's not easy to do. But these two
well,
are.
this one looks the same way the other one does. It looks like FXI because it stopped right there.
So
at the
the
midline
China deal hasn't collapsed just yet.
Not yet.
And if you were bullish, this might be some place to take a bite.
Mm-hmm.
But it's
I
hard to
wouldn't-
bite into anything on a day like today, and this thing's down
It
7%.
is.
But again, it had a big move, so a pullback like that is not inordinate.
No, but I personally wouldn't be investing in China right now until I see what China's going to do
Well, of
about
course.
the
I mean,
Taiwan.
that's the whole thing.
Mm-hmm.
Some of these ones that were kind of that had big drops and then they had bounces, like Roblox,
ROBLX,
Right.
RBLX.
RBLX. You know, where the
Now,
technologies are, there.
Yeah, I like Roblox fundamentally. It's not been doing very well. It's
No.
you can see down, down, down,
Mm-hmm.
but it's solid as far as, my youngest grandson loves Roblox.
Right.
And so do all of his friends, and there's lots of them. So it can't help but go back up. It's just not right now.
And how about Uber, UBER? Yeah, you would think maybe with the gas prices, it would be good for the ride sharing. Let them spend their gas,
But
right?
then, yeah, but they also put an extra fee on top of the Uber fee for gasoline.
Oh,
And then the drivers, I took an Uber down to the airport a couple of weeks ago.
yeah, that's no deal.
And he said, can you, in addition to your tip, can you give me a gasoline stipend? So they not only has Uber put a fee on it, the driver himself is asking for a fee.
Right.
So that could play into that.
DD is the ride sharing over in China, and I thought it was a pretty good deal.
DD is DIDI.
Yeah. And out of $2, you can bet that on a horse at the Belmont last weekend. You know what I mean?
DIDI doesn't come up on I don't have that symbol.
DIDI?
Yeah, it's not available.
Oh, that's interesting.
Yeah.
Well, I think it's something to keep an eye on. Again, it's with that risk of China, but it is out of the doghouse as far as the government's concerned, and it does have obviously a story to tell on it. Yeah. So
Ride sharing in China is as crowded as that place is. Shanghai is the most crowded city on the planet.
Right.
And they run three 8-hour shifts per day. So people can work 24 hours a day and the place is never silent. So that'd be a good place to ride share because you wouldn't have to fight the traffic.
Right. I wonder if we looked at a little bit of a longer term sunny bands on some of the stocks.
Hey, I just looked it up. DIDI has been delisted from the NYSE.
Halted?
It looks like, yeah. It's on the OTC market now. I mean, I'm looking through headlines, so
Thank you.
That's what it looks like. Just happened today. It looks like.
No, that's why it's not there.
Well, hopefully it's not what do you call it?
DEAD.
Privatized, or there goes my money, right?
And small trust run on New York. Yeah.
I was wondering if we looked at some of the longer term stuff on some of the stocks that people might want to take a look at, and if there's anything on the sunny bands that might give you a hint that it's.
Well, my favorite stock's Tesla. So let's look at that one first.
Exactly. Yeah.
That I still love Tesla. I'm not in it at the moment. I had a large holding in it and I sold out in January.
Right.
Right up in where was it? 22, right up in here. And it's been going down ever since. I do think that it's going to go back up, but I'm waiting until it crosses this DMA. When it goes over the purple,
Yeah.
then I'm interested in buying. But the buy signal with the flat DMA, right? Even though this was a buy signal right here, because
Right.
the DMA was flat at that level, I did not take the trade. I told my subscribers to Sunny Side of the Street that I was watching it to see if it was confirmed, and it wasn't. So now it's back down, though it's not as low as the E-mini or the Dow or the NASDAQ.
Yeah. Waiting is a very difficult thing for people, and that has absolutely been the best trait to have in the last 6 months is the ability to wait.
It is. It is.
But I was wondering if any of the longer term charts on things like Netflix, things that have been totally slammed, Netflix, Facebook. I mean, is there anything going on there that their PE ratios seem to be way down? I mean, I think Facebook's like 16.
Let's see.
And
Facebook.
they got 3 billion people doing their thing. So, got to make some money. on it.
Facebook data request failed.
Did they change the symbol, David?
Oh, yeah, I think that was just on Friday, maybe. So it's
Is it Meta now?
yeah, I'm pretty sure it's
Yeah, that's
sure
it.
is.
That's it.
Sure is.
Yep. Yep.
Yeah, I mean, this stuff is like I say, if there was ever going to be a crash, you would think that this is the environment for it because you got the entire central banks except Japan hiking rates, and then this stuff here, if it starts breaking under these numbers here, I mean, there's a real vacuum that could hit, and that's you remember from '87, it was a vacuum. You know what I mean?
Yes, a total vacuum.
And in what do you call it? In when we had the shutdown in 2020, that there was a vacuum. Where
Right. Right.
And so if there was ever going to be a vacuum, I think we're looking at a potential vacuum here.
Yeah, I think you're right. I do.
And of course, after the vacuum, you create a heck of a lot of good values. So that would be nice. Maybe if they drop this thing to 3,200 before the end of the month, it wouldn't be the worst thing in the world.
It wouldn't. The day after the crash of '87, I called my broker. We didn't have online trading back then.
Yeah.
I called my broker and said, buy everything you can get your hands on.
Yeah.
And that was one of my best trades.
Yeah. Because, if we did break fast down to those neighborhoods, then the fallout after that would be you'd probably hear, oh, job cuts are going on, and all this stuff that happens after the fact where the market has already bottomed would come out.
Right. Right.
In other words, the market goes down to 3,200, and then all of a sudden they start announcing layoffs, and they announce cutting the earnings, and then they announce, oil or commodities are tanking or whatever. All of that would be happening after the market hits its lows.
Yeah, exactly.
So that's why the probably the best thing that could happen to stocks would be to have some kind of an event to cause that type of a thing.
And in this case, it would be sell the rumor, buy the news.
Yeah. Because, otherwise it's going to be this Chinese torture, up 200, down 300, up 150. You know what I mean?
Buy.
Yeah. And
that's my automated system. Did you hear that? It said buy. That's my automated 5-minute system. It says buy, and sell.
Yeah, well, like I say, if they can close it above that 38.10 number, I'm sure a lot of people are going to find that helpful.
Sorry about that.
So that's good. That's good.
Yeah, this is 38.41 is the line in the sand for me.
Yeah. And that 37.50 where it hit today was a very good place for it to bounce from, because again, that's about a 16 PE ratio. And that is I was talking about bands. That's the upper band of what a bear situation goes to is about 16. An overshoot is 14. And the 14 is the 3,200 number.
I'll put the PE ratios on the chart for next time. I don't have them today, but we'll look at them next time.
Yeah. Because like I say, it just comes down to one other thing I was going to ask you, because you look at some of the commodities. I was trying to figure out if these soybeans have peaked. Can you put up soybeans? I see they're on your chart up there.
Are they?
Yeah, I thought I saw them a little higher up there.
Oh, there they are.
Yeah. Because, that's a historic high. It's way away from its averages. And, when you get
and this one looks like it's going to hit that. See, the gold is on top. You can see it down here. Gold is on top. But this is red telling me that was the place to go short.
Right.
It looks to me like, if I'm guessing, it's going to hit this gold DMA line right there. So it's going to come down 1687 and then bounce and go on up again.
Okay, so there's
We're not
nothing,
getting rid of inflation today.
right? And they're not going to be able to grow the grain overnight. It takes time.
Right.
Yeah.
And then we have water shortages. And so that's going to make prices more expensive.
What about this natural gas? This is another big thing that people should remember, because there's a lot of people who, are pretty sharp, and they're thinking that, and if you look at RRC, that's a stock for that, RRC, and LNG. They're saying that we could go to 10, 15, or 20 this winter on natural gas. And of course, that would be pretty beneficial to this stuff. This is stuff that has come down to somewhat of support, hasn't it?
Well, it's sitting right on the DMA in midline right there. That can be support because it's flat like that. When
Right.
it's rising, we're long. When it's falling, we're short. And then when it's flat, we're being on alert. That's all you can say there. It looks like it'll come down to here, but with it flat, chances are it'll bounce and go back up.
And a 29.50 and then a 31 number would be kind of lines in the sand.
Yeah, the 29.42.9. So 29.43 is the lower outer bands. It says LOB. So that would be the line in the sand where we'd look for it to bounce again.
And what is the red telling us? Is it that it has turned a bit negative?
Yes, it was. Gold says it was long, and this is a sell signal.
I gotcha. So it might not be the worst thing to get a gold bar going before getting in there. Or?
Right. I mean, chances are it's going to go
Down to 29 or 30,
and then bounce and then turn gold again.
Okay. And what about
it's done
LNG?
over here. Look on all the way to the left. It was gold, and then it was red, and then it was gray and gold, and then red, and gray and gold. A lot of activity going on there, but it can turn several times.
Yeah. Well, the bands also would keep you in there, though. I mean, this thing basically got long at $17, and it still hasn't told you to get out.
Stayed above the gold all that time.
Yeah. But even in the bottom band has not been penetrated the entire time. So for position traders or people who like to buy things and let them ride, that's not a bad thing either.
No, not at all.
Yeah.
What did you say? The other one, LG?
LNG, it's Cheniere.
Liquid National.
Cheniere.
Very similar story. It's
but that's a little weaker, huh?
Down, it is weaker. It's hard to see, but there's a red dot right there showing we're under the lower inner band and heading to the lower outer band. So if we
start breaking under 126 on that one, and the thing's starting to point down, that might be a game set match too, huh?
Mm-hmm. And then the 20%, of course, is at 120.93. So we could easily go to that level. With this turning down and that below the lower inner band, it's going to go for the lower outer band, more than likely. And we've got red vertical lines down here.
It's just hard to find things that are going to rise in an environment where the inflation is this high and the central banks are withdrawing their liquidity. It's
I like the only thing I like right now is your treasury yield idea of rolling months.
No, to be honest, that's where you're supposed to be. But who gets paid on that? There's not a broker in the world who'll tell you to do that because they get zero money. Even the trade desk at the brokerage firms, they charge zero to buy treasury bills. And also there's no bid-ask spread. Right. So, I mean, who's going to possibly tell you to do that?
Nobody, but
nobody
you would. But I would guess the brokers right now.
Somebody who doesn't have a vested interest in you doing something else. You see what I'm saying?
Yes. Brokers are probably telling you buy. It's all-time lows, buy. Yeah. This will be a good buy in time.
Yeah.
That's my guess.
No, a lot of smart guys say I'd rather miss the first 10% of the turn than be involved in the mess that goes on beforehand.
I say I'd rather buy a price that's going up than one that's going down.
Yeah. And like I say, as you can see from your board there, I mean, where do you hide? You got and that what do you call it? That Bitcoin looks like it's folding like a lawn chair. I wonder if you can put up MicroStrategy? That guy has been buying Bitcoin with it's a stock, but it's a company where the guy has been MSTR. Now this guy, I'll tell you what this guy's been doing. This guy has been issuing debt, and with the debt that they've brought in, this is my understanding, I could be wrong, but they've been taking the debt. In other words, they borrow, say, $1 million, and obviously it's a lot more than that. And then they take the million and they buy Bitcoin.
Yes, I have heard of that.
Right. And then they make money. So say they made
Right.
$10 million in profits. They take that and they put it into Bitcoin.
Hmm.
And obviously for a while, this thing, I mean, let's look at the chart. If you go back a little bit, this guy was like the boy wonder for a period of time. If we go back like 2 years or something like that, there you go. Yeah. See, he was the boy wonder, up until
Well,
about
when
April of.
Bitcoin was going up, and in a bull
Yeah.
market, everybody's a genius.
Yeah. But I'm saying, he was leveraging too. I mean, obviously you're taking loans out, that's leverage. So he had a great idea there, but if this thing breaks to the downside much further, it could be pretty disastrous to this guy.
Now, I leverage my trading with something I call my ultimate F strategy,
Yeah.
where I compound my trades based on several things, but primarily it's simplistically speaking, it's based on the profits of the previous trades, but it also reduces the number of trades I'm putting on based on losses. And it compounds beautifully, far more conservatively than Ralph Vince's optimal F does. And that's how I leverage, but I'm very conservative with the leveraging. I leverage, and that's not conservative, but I do it conservatively. And of course, like everything else I talk about, it's for sale too.
Yeah. Let's look at a couple of the things that have been very conservative for people and see if they're busting down. Go XLU, and that'll be your utilities. Let's see if they're hitting, like, I'm sure they're hitting everything. XLU, that looks like it's giving it up.
It's above its all-time high over there.
Well, I mean, you see the red dot pointing straight down. Yeah, that looks like it's giving it up pretty good. What about XLP? That's your staples, Coca-Cola, Procter and Gamble. That looks like it's giving it up, I think. Let's see. There you go. And then SP.
Not as bad as the S&P.
Oh, no. This is, I mean, like I say, this is what they call the least wet people out there. You know what I mean?
Yeah.
SPYD. And SPYD is all good dividend stocks. And look at that.
It's below there too.
So
it's all underwater.
Yeah, no, exactly. There's, like I say, when they raid when the cops come and raid the house, everybody's going downtown. You can't say, I didn't know what was going on in there. So anyway, I guess, like I say, there's really not much you can do because everything seems like it's kind of rolling over.
Unless you're a short trader.
Exactly. And unless you're keeping everything on a short leash, and obviously in this environment.
But I mean shorts, like trading the S&P short.
Oh yeah, no, right. With a short leash, because again, as we know, if 3750 is going to be the low, tomorrow's turnaround Tuesday, if your name is Murphy and you short today and they come out with anything positive on PPI tomorrow, this thing could be up 100 S&P points. So, shorting it is a wonderful idea until you go overnight and the news changes overnight. And then the high frequency traders.
A long time ago, I used to trade and hold overnight trades, but I haven't for years held anything overnight.
Yeah. Well, a lot of people do though, and if you do and you get a gap up, it's a painful experience. Yeah.
It is painful unless you want to sit up all night and not sleep.
Well, we got 5 minutes left. I think it's important because we did cover a lot of stuff here. Let's explain when the people come to you, what can you kind of help them with, and how does all this stuff, how do you make this stuff available to them?
Well, the first thing they can do is read some of my books. I've written books about everything I know, primarily from Trading 101, Trading 102, getting started in trading, electronic day trading, TradeStation Made Easy, and now my new object-oriented programming made easy. I've written articles in all the magazines, and that's always a free way to start, or a cheap way to start. You can give me a call. I'm at 760-908-3070. That's my cell. You can call me anytime. I work about 16/24 to 16/7. Sorry, I work about 16 hours a day, 7 days a week, because I love it. I am passionate about the markets. Oh, and I like to teach people how to do what I do.
Perfect.
My website's moneymentor.com. And that's not a big sales pitch kind of place. It's a resource. And I've got everything I want to reference myself, I put on my website so I can remember where it is.
Yeah. Like I say, you give a nice balanced approach to things, and you use your experience to try to give people the best information they can get,
Yes, exactly. And I'm happy to talk to you for free to start with.
Sure. So take advantage of that, everybody. As far as Option Professor is concerned, we do have the weekly market update where we discuss everything from the stock market to the bond market to international and also the commodity sectors of crypto and gold and all that stuff and oil. So you go to optionprofessor.com, and then basically you can also find out how you can get the hedging against market declines and upside surprises, which is something I've been trying to get in as many people's hands for the last 6 months to a year. So optionprofessor.com will be able to give you a hand with that as well.
And
So,
I read all of them, Jim. I love
well,
them.
I appreciate it. Because like I say, at this point in time, I've got all this knowledge I'm sharing. I got no axe to grind on one side of the market or the other. So, I can give a pretty independent view on things, which sometimes people need to hear because, if you
Oh,
bought
they
a new,
always need to hear that.
well, if you bought a newsletter and the stocks are all tanking, the guy who wrote the newsletter is going to tell you to hang in there. And then, if you are going to some guy who, has a big track record and all of a sudden you get in there and it collapses or something, you can get frustrated with that too.
Absolutely.
So anyway,
And I also I subscribe to several newsletters, not for my own trading, but because like you, I can tell people what others are saying because I've got lots and lots of information in my brain.
well, you can also get it just off of watching CNBC and Bloomberg, more CNBC. I mean, they got one guy in there calling himself Mr. All In since about 4,500 on the S&P. I don't know what Mr. All In. But of course, like I say, if things go very badly like they're going now, they talk about the long term, how it goes up. And there's obviously historical evidence that the market always goes back up. But the more people who beat a drum, the more possible that drum, will break at some point. You know what I mean?
Or at least the sticks will break.
Because, 08 to 2021, what happened? What happened is very clear. The cost of money was zero. So unless the cost of money is going back to zero, it may be difficult to replicate that type of activity. And that's the truth.
It's not going to go back to zero for a while.
Yeah. And then the PE ratio went to 22 because of the interest rates being at zero. So unless the interest rates are going back to where they were and the cost of money is going back, it may be difficult for the market to have any kind of performance like it used to have.
The market, the rates go to zero when we're in trouble.
Yeah.
And,
Or when the Fed decides that everybody needs free money. That PPP program was so damaged with fraud, et cetera,
it was.
that it was a real. It was a good idea philosophically and a very bad idea realistically. But anyway, so we are at the top of the hour, Sonny. Everybody, make sure you go over to Sonny's website, moneymentor.com, and go over to optionprofessor.com. Get our information, and Sonny can help you quite a bit with her things as well. So thanks a lot for being here, Sonny. We'll do this again, of course, and it's nice talking to you.
Thank you both, David and Jim. Sorry.
Okay, David, back to you.
Right. Thank you.
All right.
David.
Yeah, great show. Lots of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. And you can also just go to TimingResearch.com to get access to today's show as soon as I can get it posted, as well as any of the past shows and events. And I just want to thank my guests again for today, Sonny Harris of MoneyMentor.com and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.